But let me first bring on board our technical experts. I think Nooresh Merani is with us to talk to us about just that. Nooresh, hi, good morning. Good to be speaking with you. Let's start by discussing what's been happening to the market. Bank Nifty, the clear outperformer. But do you think this is likely to continue? Today, the tables will turn towards IT.
So we could see a pop on IT given the Accenture earnings and the guidance. But overall, the structure is we are setting up for a much bigger move possibly on the Bank Nifty. Because if we look at the performance over the last 1 month, 3 months, 6 months, 1 year, 2 year, 5 years, ever since COVID, we've had a major underperformance on various timeframes for Bank Nifty. We've started seeing the first indications of an outperformance. We've started seeing a new all-time high. We've started seeing the private bank Nifty actually give a breakout, which was generally the underperformer. We had seen PSU banks do well. So out here, once we see a 1170 cross on ICICI Bank, that would create a fresh breakout into all-time highs. We are knocking at all-time highs for Axis. We are say 2-3% away on an HDFC Bank. So if these large heavyweights continue, we could see much more moves on the Bank Nifty. So still believe on a structural basis, it would be Bank Nifty over IT. But yes, for the day, it could be IT.
A little bit of volatility, but again, we've been moving higher consistently, and yesterday also was the same case.
Yeah, very similar, but the only change yesterday was for 6 consecutive days, we were making new highs on the index, on the Nifty. Yesterday, we failed to make a new high, even though the close was positive for the indices. And I think the major attribute for that, which can probably indicate is maybe some sort of profit booking which came back into few spaces like the auto stocks. I think for the 3rd consecutive day, many of the large cap names had seen some bit of profit booking. So that weighed a bit heavy for the markets as such, or for the indices as such. But net, I think the view is still pretty much positive for the indices. In the last 2 days also on a breakout as well as after yesterday's consolidation, we've been managing to hold on to that 23,500 mark. I think that's the key part for this market trend, that with every new resistance being broken out for, we've been making new highs for the indices, and the previous resistance has actually become a fresh support for the index. Now, there is no major data in terms of short covering for either the Nifty or the Bank Nifty, where we can probably attribute that maybe some sectors or some specific stocks could probably outperform. But the only key part which we've observed over the last 4-5 days of the pattern is the sector churn. So right from the likes of a few days back, where you saw the metal stocks outperforming. Yesterday was fertilizer, chemicals. So there are a lot many differentiated sectors this time around which is participating, adding to the market breadth overall.
If you like this video, then like, share and subscribe to ET Now.